very bullish about electric vehicles, very, very bullish. And within cities, absolutely a big part of the solution. The challenge is understanding in detail the purchase decision. What makes somebody particularly buy their first electric vehicle? And I think critically important is to push first into taxis and private hire vehicles, because they do such large mileages that electric is cheaper.
And it has a bigger impact.
And it has a huge impact on air quality and so on. The second thing is, I hate to say it, but people with driveways and garages, because it doesn't matter how much public charging infrastructure, if I don't know I can charge my car, I'm not buying an electric car. I've got to know for sure that if I need it tomorrow morning I can charge it, and that means having my own charging station. And people in cities, because I think it's in cities that cities you can forget range anxiety when all you're doing is commuting in and around a city, and cities have air quality problems. So I think if
the
we
other
can
thing
figure
about cities,
out
as a city person,
matrix,
noise pollution is something that doesn't get a lot of attention.
Agreed.
And of course, part of the noise of cars is the tires on the street, so that's not going to change. But electric cars are a lot quieter. It really doesn't get. Noise pollution doesn't really get much attention, but it has negative effects on people's health. It has negative effects on society.
I think I put it under the kind of co-benefits. It's absolutely, you're right. And one of the things I think about is, supposing you wake up and all the cars in City X are electric. All the cars, all the buses, all the delivery vehicles. And delivery vehicles are very interesting, because where noise pollution absolutely is a critical decision maker is late night deliveries and overnight deliveries. If you have some truck turning up, big diesel truck, and then going beep 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 as it reverses, and having somebody rattling those metal cages out and so on, forget it. Whereas an electric delivery vehicle with appropriate internal equipment and training for the staff, you could really free up a lot of road space. But I think that I was going to say the thought experiment is, if you woke up and everything was electric and nice and quiet, what would happen to real estate prices near to major roads? And a lot of older cities, the most expensive real estate was the one on the boulevard, was the magnificent street-fronted villas, which become uninhabitable in a diesel-infested city.
Yeah, the air pollution and noise pollution just ruin them.
Do they suddenly become the most attractive properties again, or more attractive? So we need to understand the decision at the level of the individual. What would make you either go to a car club or an electric vehicle?
That's what it comes down to. That's what we spend a lot of time focusing on. The thing that surprised everybody is, once they drive an electric car, is the performance and the quality of the drive. So I think the key is getting them in them, and that in one way is another benefit of fleet, starting with fleet, because then it gets people in the car.
And car shares and car clubs,
sharing,
because you can. It's a very car rental. I've been expecting, some relatively big islands. I don't know, maybe Malta or the Canary Islands to go completely electric. Just say that's it. That's what we're going to do. And then every holidaymaker that comes will have a fantastic experience driving an electric vehicle. There's no range anxiety. It's an island, and I'll guarantee. And the other piece of the segment is second cars. Where people have. So you could sort of say, right, how about second cars for people with garages and driveways in cities? It should be a complete and utter no-brainer.
It seems like a total no-brainer.
And I think that segment will go not 1% to 5% electric. I think that segment within the next 10 years will go 80% electric. It's just because why? Once you've got people in the car, why wouldn't they? If you look at the next few years of the EV industry, the next few years of electric vehicles, I think a lot of it is about segmentation, because it's pretty clear. Tesla has proven that at the high end, people are prepared to pay a big premium for a really high-performing electric vehicle. Saloon, they'll do the same for the X, the Tesla X.
I think you retweeted that story I wrote about it being the number one large luxury sedan in the U.S.
That's right. It's the largest single-model luxury sedan. So you start adding models together and so on. But it's extraordinary. So there's definitely a segment there. Then what I'm really interested in is sort of the more mass segments. And there's been this assumption that the Chevy Bolt and then the next Tesla, the little Tesla, will. there's been this assumption that the next
little Tesla,
the Chevy Bolt, or I don't know what's it
Tesla
called,
Model 3,
the Tesla Model 3 will crack the next, will crack the mass. But the mass market is made up of multiple segments, and the one that as I see it, if I had to run a car company, the one I'd be interested in is people with garages or driveways, second cars, so 2-car families, who live pretty near to cities. So they're probably subject to there's a lot of anxiety around air quality and city issues, city environment issues, and that segment, it ought to be a no-brainer. And the interesting thing for the car industry is, you say, well, that's such a small segment, it's so specific. You're talking about percent and a percent, and it comes down to maybe only, let's call it 3 or 4% of the car industry. So what? That is basically 4x the market that you've currently got. So it's a perfectly, I think that
and that's sort of been, well, I mean, there's still a lot of room for new cars, new classes, but I mean, BMW, the i3, BMW is the only, BMW and Nissan are the only ones that really sell their electric cars widely, like to any market. And the i3 actually accounted for, I don't know every month, but I know 1 month last year it accounted for about 10 to 15% of BMW's passenger car sales. So it looks small on the whole. It's like, okay, it's less than 1%.
BMW, it's
but for
significant.
BMW passenger cars, it's 10%.
You've got the Leaf, you've got the BMW i3, you've got. I'm very interested in Norway. The top-selling car is the e-Golf.
Yeah.
And what would be fascinating would be to know what proportion of those sales are second cars. What proportion of second cars? Because you've got to the point where essentially the electric vehicle is now the perfect second car. Not quite, because it's still a little bit too expensive. But at the end of the day, the second car that you swap.
But if you're buying used, even the depreciation so strong, it could be a used electric is the perfect
I'll bet you
second car.
cars don't turn over very often. But people don't. With a main car, they might buy a new one every 2-3 years. A lot of people, but a second car, I bet you people are hanging on to those for a lot longer. So that market, I think, is going to open up pretty quickly. And it doesn't matter if I'm right or I'm wrong. The point is segment and find specific users that already get more value from electric than they do from traditional, and sell the hell out of it. And you only need it to be another 1% of the market will double your sales. So 1% of the overall vehicle market.
And it gets your foot in on the low-hanging fruit that then grows as the years progress and the battery costs come down with the learning curve.
Right, and our forecast for battery price reductions, we've just had a year 35% battery price reductions. This year it's going to be more modest. We're saying 10-15%. But then 2017 you get the gigafactories, you get the Panasonic big factory. So you get the volume. I think we'll see another step down in 2017.
And it comes in steps, but what's your estimate for like 5 years? Like 20% annual?
I have to be careful not to answer your question, because my team will kill me, because that's their job to come up with an actual number. But I'll tell you what,
it's a hard job.
It is, but we do a lot of modelling around experience curves, and then we're also looking at battery chemistries and exploding the bill of goods and looking at what goes into it. What I'll tell you is this: Saudi Aramco has just put out its outlook for, I think, 2040, where they say that electric vehicles won't be very significant. They don't need to worry about them, because the battery prices, of course, will come down, but only by 40% between now and 2040. And it's like, hello, they came down 35% last year alone. Yeah. So I don't know the exact number for 2020, but I wouldn't be surprised if they have halved again by 2020, literally halved again, as you see volume, innovation, scale, supply chain, competitive pressure,
And there's an interesting report and chart from the McKinsey on where
McKinsey. I've heard of them.
Yes, you have a history there on where
I used to work.
On the battery, what the battery cost has to be for a pure electric car to be competitive, just on a straight upfront cost basis with a gas car.
Right.
And I mean, it's getting basically it looks like Tesla hit it with the Model S, and for a certain segment. But with the Model 3 and the Bolt, the cell cost, adding on the cost for packs, it looks like they're basically making it competitive with gas cars at $2 a gallon of gasoline, which is sort of like the breakthrough point. So assuming that's close, in 5 years, you would assume they would be a lot lower.
So I haven't seen this analysis.
I'll show you.
I have to see whether it agrees with the stuff we were doing a few years ago. But when we were saying that we thought by 2020 that the electric vehicle EVs for the median owner would be competitive with internal combustion. Now, of course, what's happened since then is the battery prices have come down faster than we thought, but so have the gasoline prices.
Yes.
And so what you've seen, in the US, where gasoline, where the taxation is lower, those price drops get passed through to the consumer quite directly. In Europe and Asia, that doesn't happen. So,
relatively, the European EV market
US
has grown
slowed down,
a lot better.
but the European and Asian have speeded up.
Yeah.
But the bottom line is, and I don't mean to. I'm sure the analysis from McKinsey is absolutely, it's rock solid, and I'm sure what it says is correct. That within the next 3 to 5 years, for most families, EVs will be fully competitive on a total cost of ownership basis. Now, they'll still be more expensive to buy, but they'll be cheaper to run. And that turns it into a finance problem, right? Because then, if you've got the right financing package, if you're paying monthly and you bundle up, the whole costs, you can actually, there's innovation there that could really move to large numbers.
Renault and Nissan have, especially in the UK and France, they've done this leasing model for the batteries, but they haven't really rolled that out widely, and I'm curious if that'll be the future or not. But
it's probably, maybe not. How should I put it? Innovation, business model innovation tends to be done well by entrepreneurs, but will Nissan crack it? Will it be the BMW shared ownership, the car club, the BMW car club model, or exactly who will crack it, or will it be some wild-eyed entrepreneur who figures out how to do the equivalent of third-party ownership in solar?
Yeah.
And says, well, maybe you just pay for your car as you use it and share it with your neighbours or whatever. Nobody knows yet. Which models will succeed? It'll be combinations.
I'll be curious next year to chat with you about how things have changed. The UK again is an interesting story with the EV industry because it had subsidies. It had this £5,000 grant for a while, and nothing was happening. It was like there were just a few hundred cars being sold, and it's really taken off in the past year. It's it's still a niche that needs to mature, but it's gotten a lot more.
Do you have the latest figures for the UK? How many EVs are sold in the UK, or how many EVs? Do you pure EV or plug-in hybrid as well?
Oh, I include plug-ins, but yeah, the numbers. I don't have the numbers on my head, but it's been like a substantial increase. So
have we gone through the 1% of new vehicles?
I think you're around like 1.5%,
really?
But I might be off, and it of course depends on if you're talking about this month or the last year or which segments. But
so
I think you're busting through the 1%, or you already have. But
so the EVs, I'm very bullish about EVs. I'm partly bullish because they're fabulous to drive, just smooth, quiet, good acceleration. You don't have to go to a gas station and fill them up and get diesel squirted over your shoes and all that sort of stuff. Also, clearly, their impact on climate. Also, that depends on the electricity mix, which is improving all the time. But also the air quality. Impact on air quality, which is a huge problem in European cities. I mean, the Dieselgate broke in the US, but in the only reason that a lot of the diesel was sort of legal in the EU, which was not legal in the US. The only reason it's legal in the EU is because they're using these, the real life cycles are so much worse than the lab cycles, and that's something that I think is outrageous. I know it's now being addressed, but basically it's being addressed by lifting the allowable limits, which strikes me as being a pretty weak way to address it. But air quality is another reason for electric vehicles. And then the other thing is the ability to roll out the new transport technologies when your fleet is electric is just faster. I mean, the vehicle is becoming a platform for the digital provision of services, management of assets, and so on. Obviously, on the board of Transport for London, and I'm more than aware of the challenges we face managing constrained road space. So you've got nobody's inventing new road space in London. The only way we can deal with congestion is by getting people to shift modes to public transport, or to walking, cycling. We've got these new cycle superhighways, which will be launching, and most of them should be done by May. And then also, critically important, digital management of your road space, which means car sharing, it means helping people to find car parking spaces more often, it means dealing with the sheer volume of private hire cars that are just circulating at any one time, trying to be as close as possible to where the next fare is going to be, and all of this has to be managed through digital technology. It's the smartphone that will free up our streets, and it's just so much easier to build all of those. And then the other thing is the safety. The fact is that without going to driverless cars, you go to cars with all sorts of autonomous features. It's going to help you park. It's going to help you stay in the center of a lane. It's going to help you not hit a cyclist. It's going to help you to overtake safely. All of these things, it's just so much easier to build into an electric vehicle. So the electrification, I think, has got so many drivers. I'm very bullish.
Being that you're British, I wanted to English, I could say. I wanted to just get your perspective on the UK solar industry, because it's been a bit of a roller coaster the past few years. What's happening there? What do you think it's going to look like in the coming year or two?
So I'm okay. I'm British as well as English.
Yes, I know.
I feel more British than I feel English.
Good.
My family are immigrants, but I'm
a global citizen. So
right. I'm a global citizen too. One can be global, one can be English, British, an EU citizen for the moment, and also a global citizen. How long the EU citizen lasts, we'll have to see later this year, maybe. Now, the policy environment in the UK is, how should we say, has been. I think you're very nice to call it a roller coaster. The way I describe it is that with the new Tory government, it was a case of what the French have a saying: reculer pour mieux sauter. You have to pull back in order to jump better. The Tory government has certainly done the first part of that strategy, has executed it almost perfectly.
I think it was pulling back to sit down. Seems like.
Well, we don't know yet. No, and I mean,
it's intentions, not.
We've started to see some of the mieux sauter, or at least what we're going to see on that front. So pretty clear statement: offshore wind is a big part of the renewable energy future, subject to getting its costs down, which is an entirely appropriate thing to want. For my own sense is that there's much too much reliance on gas. It's a leap of faith around gas prices, which right now are very low. They look like they're going to be low for some time, but I would still want to diversify.
Yeah, that's the thing. Gas prices low, or changing the narrative around energy, focusing more on gas again instead of renewables. It just seems so short-sighted to me. They're low right now. We've seen this happen so many times throughout history. That's the point of gas and oil. It's so volatile. Well,
there's some things changing that should reduce that volatility, right? And two things very clearly. One is fracking. Even if you can't frack, or if it's unsuccessful in Europe, as it might be, there's still going to be US shale or low-cost gas making its way into the European markets. Because the second thing is LNG. The first exports from the US, enormous investment, over-investment, most likely you could say in Australia. You got LNG coming from, it's really coming into the market in a big way, and that should act to reduce the volatility. And I'm sure you heard as of the summit, Bloomberg New Energy Finance summit last year, I've been talking about the age of plenty. We have plenty of coal, plenty of gas, plenty of cheap solar, plenty of wind.
But with solar, utility scale solar in the U.S. last year was average of 5 cents a kilowatt hour. We're seeing the record lows broken repeatedly. With solar like 3 to 7 cents, 3 to 8 cents a kilowatt hour, 9 cents. It's a very competitive price without any risk of volatility, basically. So why? You
won't find me disagreeing. Some of those numbers you've got to be careful about pre-subsidy and post-subsidy and so on. So our sense is that solar right now, at the very bottom end, it's probably more like sort of the very bottom end, unsubsidized is around the sort of 6
in the US.
Dubai, and you've just seen it in India as well. There's been an award at 6, but
But Dubai was even lower. But it has very low cost of capital.
Exactly, they're not subsidised, but they're kind of special projects.
Right, exactly.
So, think about solar as being pretty much in the mainstream.
Yeah.
8 to 12 cents will get you a lot of solar.
Yeah.
Right? But it's still only during the day. It still doesn't quite match the demand curve, even if it's for the, this is going to be a fantastic 5 years for solar. There's just no question, because, there's all this, it's less than 1% of the world's energy mix. I mean, keep those people who don't like solar, they keep saying that, for the near future, because that's going away.
Well, we do this
a major part of the world's energy mix.
I do these monthly reports. Now I don't have to estimate rooftop solar for the generation reports, because the EIA has started to do that. But I do these monthly reports on capacity additions in the U.S. and then one on electricity. Yeah. So the capacity additions are like 90% renewables, like month after month.
Month after month. Exactly.
And then you do the electricity at the same time, and it's like very small percentage is solar or wind and solar. It's a long process of change.
It's a long process, but we're going to be in a very different place in 5 and certainly in 10 years in terms of the contribution. Amazing figures out of Morocco. They're aiming for 42% renewable energy by 2020, and the King has just announced 52% by 2030.
And then was it your panel the other day where the guy said they expect...
the minister, we call him, who was talking about that. That's right. And then you've got...
But he said he thought it would be more than 42%
and he thought
by 2020.
they'd go over it. And it's not all solar. There's some other things there. But even this region, that's what's different this year coming to the conference. And I think Paris is really a kind of a game changer, not in terms of legally binding and what was on the bit of it. No, what's happened is this transition in the electrical sector is now seen as mainstream, not as mainstream. It's been inevitable. So here, instead of talking about, well, eventually we'll go to 7% renewables, now it's 24%, it's 25%, Dubai, Abu Dhabi, and nobody goes, yeah, well, they're just saying that's never going to happen. It's now like, why couldn't you do 25%? Look around you. Of course you can do 25%. It's sunny all the time, and this stuff is cheap. So this is now a completely different mindset. The sorts of players in the halls, they're out there wanting to build 800 megawatts of this and 400 megawatts of that, and these are big companies. These are not wild-eyed entrepreneurs anymore. So it's I
think I came here first 4 years ago.
Right. That was a tough year, because that was the kind of, we call that the Solyndra year.
Yeah. No, it was. I mean, the atmosphere. I mean, in a lot of ways, a lot of this stuff is the same here. But in the past, it was like a hopeful, like, oh, this is a future somewhere down the road, And now it's like, this is here, and this is competitive, and we have big plans and big projects. So it's become a lot more of a serious, I think, discussion around.
Coming back to the UK and your point about gas. I mean, the UK, we had it in I think it was the first half. I haven't seen I don't think we've got the figures yet for the full year, but the first half was 24% renewable electricity, and the amount on the average household bill was £60, something of the order of £60. And the way I express that in cups of cappuccino, it's half a cup of cappuccino a week per household, and you've got 24% of your electricity from renewable sources. First of all, obviously that has the benefits in terms of climate, right? But think about it from the geopolitical point of view. And what's amazing is that the commentators on the right haven't figured out that having 24% of your electricity that is not being shipped around the world from Algeria, it's not coming from Nigeria, and it's completely immune from the attentions of Mr. Putin. That's 24% of your electricity that Russia has nothing to do with, never will. You can fix the interest rate so it's not volatile. And so this seems to me to be a very, very good deal, even though I'm sure it could have been done more cheaply. We've not done this cheaply. We've done it in some ways in a really stupid way. But it's still half a cappuccino a week per household to get a quarter of your electricity out of the grip of Mr. Putin. I mean, this is it's obvious, isn't it?
Yeah, I mean, it really is, and we focus on this a lot, but it's really sad, because this is, once the right comes around, these are just wonderful talking points for them. Energy independence, self-reliance, energy security. Yep. These are talking points that they can get their constituents excited about.
They are, and but there are also things that are worth investing in. And it doesn't mean that you can do things in an inefficient way. As you know, I don't like feed-in tariffs, because they end up creating rents for the industry. Industry sort of loves them, but they end up, they may be needed to jumpstart the markets, but then they start creating constituencies and rents. And it's entirely appropriate to sort of, hate that, but still to think about, well, it's actually, resilience has value, geopolitical independence solutions have value. And the other thing is volatility. It's the one that very often falls. People talk about, okay, there's other externalities, air quality, etc., jobs, which I don't like make job programs in general. But here's something really we start hearing about in the US. Hundreds of thousands of people who've lost their job in the shale. In the wipeout of the shale sector. The wipeout, I mean, this is 50% of junk bonds in the US are distressed. Many of them, from the energy sector. I think about a third from the energy sector. And people are losing their jobs. And this is a personal tragedy for those people who've moved their family, they've learned skills, they've invested their careers. The problem is if the gas price, oil price came back up, guess what? There'd be hundreds of thousands of people losing their jobs in the aviation sector or the tourism sector. This is a cost to a country. Volatility from commodity prices has a real cost. It doesn't get paid by the energy consumer. It gets paid through taxation, through increased costs as companies have to move people around, people have to reskill, you have periods of unemployment.
And there's the intangibles of the family stress, the personal stress that comes from these transitions.
Yeah, exactly. We were hearing, it was so marvelous about these people who could go to South Dakota and earn $100,000 a year as a truck driver. Yeah. Well, not anymore they can't.
Yeah. Hope they put a lot of savings away.
Well, indeed. I'm not sure. Indeed, you do hope so.
So back to the UK. So what do you think for the UK solar market in the coming year or 2 years? How do you see it?
So it's hard for me to comment on the specifics of the UK solar market, partly because I just spend my time. I travel around a lot, and it's only one market. What I will say is that it's not dead. In all of the kind of concerted effort to say, this is such a catastrophe, and it's going to be, and we've sort of heard it a number of times before. It is entirely appropriate to have fair. If there are dramatic reductions in costs, then there have to be dramatic reductions in the support mechanisms and in the rates. Whether that number is exactly right or not, I don't know. And I'm sure it's very painful for those people who've built businesses and hired people, in a sense, overscale hired people on the basis of a policy environment. Essentially they've bet on a policy environment, and that bet has not worked out. That's really painful. But the sector will not be dead.
Yeah, I'm curious about it because I have seen. I hate to name a name and it be incorrect, but I feel like it was Light Source Energy or something, saying that commercial solar is viable now in the UK without subsidy, just going...
commercial projects or commercial scale rooftop? Commercial scale rooftops.
Yeah, commercial scale. I don't know if they mean rooftops or commercial scale like solar.
The trick is to make sure that we're not doing stupid solar, that we're doing smart solar, and to the greatest extent possible, we've got to be putting this stuff on roofs. This is not a large country with vast tracts of land. And if you look at Germany, I do find it troubling that using solar on agricultural land. There's just one more way in which European agricultural policy is messed up. And so I think I'm not going to endorse anybody's policy, but I'm equally not going to endorse the kind of the boy who cried wolf again, saying, the same people have said. The same people said that the solar was dead in 2011 when the tariffs were cut, and they said that the UK economy would be dead if we didn't join the euro, and then they say that the UK economy would be dead if we don't if we leave the EU, and they'll say that we're dead if we go through with these. Forget it.
There are a lot of pessimistic people out there, and it's a chess game.
And it's a very, very resilient, business community, and so I'm sure we'll get through it.
So I wanted to ask you what your thoughts are on solar energy, particularly wind energy storage, particularly in the coming year, in the global context. What are your thoughts on how the market will change? What will be the fascinating trends in these markets?
Right. So first of all, I've come out with our forecast for the year, which I called sunny with a hint of Götterdämmerung, because it's it's sunny. You always have to use a little bit of Wagnerian imagery to get people's attention. But in general, the outlook for the industry is very good this year. It's had a good year in 2015. 2016 looks like being another good year. I think probably record investment levels. It's not just Paris, but it's just the trends, the drivers are very strong. And most of the things that people are scared about in the world are to do with China's economy. Well, that'll probably lead to more stimulus spending on clean energy. If you look at the situation with the conflicts in the Middle East, those don't really affect clean energy. North Korea doesn't affect clean energy. So most of the things we're scared about are actually outside the industry, outside clean energy. There is a worry, which is the very low, particularly gas prices. If those go any lower, particularly in Europe and Asia, that could put a crimp on it. So that's the sort of Götterdämmerung scenario where it's really difficult where it stalls the industry. But I don't think so. I think what we're going to see is the oil and gas prices will end the year probably higher, maybe coal prices as well, and it's going to be a good year for solar, wind, energy efficiency, pretty much everything.
In the past few years, we've had a bit of excitement about YieldCos, and the solar leasing model apparently spreading to China a little bit. Huge is doing solar leasing there now. What do you thought? I mean, are YieldCos still a hot topic? So what's new?
One of my predictions for the year is that it's called the YieldCo is dead, long live the YieldCo. Because actually, if you look at the UK, the YieldCos have been performing just fine, and they haven't had these kind of enormous price swings. In the US, I think what happened, and we wrote about this in July last year, the investors started to think of YieldCos as being growth stocks, and they really need to do just the basic finance, the basic analysis. These are bundles of projects. If they grow, then they grow because you build more projects, but that takes more capital, or they grow because you do operational improvements, and they provide some benefits. But there's a good reason for a YieldCo to do with there are investors who are not allowed to invest in infrastructure because it's illiquid. So a YieldCo, which is a liquid vehicle, it's a solution. There are benefits in terms of diversification or operational improvement, but you've got to be really specific. If you think that this is the next Google just because the dividends grew for a few years as new projects came online, you think that's what happened in the US? Is they just expected that? I mean, because that's sort of they were being marketed as growth stocks. The stream of dividends will grow, blah blah blah. Well, they'll only grow if you keep investing more. And so, if you actually got to look at it in terms of they are bundles of projects. You do things to them.
Yeah, I mean, it's sort of a low risk, low return, long term, way to
exactly
make some money.
You have investors still very much under pressure to find yields. For all the fact that the US has now increased its base rate by 0.5%, I mean, we're not in a high interest rate. We're in a very, very low interest rate environment. And so if you want yield, you're going to have to do more creative stuff. And YieldCos are part of that. So you've got investors who need yield, you've got investors who can't invest in infrastructure for regulatory reasons. You've got real benefits to YieldCos because of diversification, operational improvement. But that's what you've got to pay for. You can't pay for it as a growth stock a la Google, Facebook, etc.
And I mean, do you have any other? Are there any other hot new kids on the block to replace the YieldCos, or is it just basically carry on with what's working? And
I think that the third-party ownership models are all interesting because they just make the decision to go clean so much easier. Green bonds are progressing. We're starting to see sort of first green bonds in odd currencies and so on. So that's certainly going to continue. Transport for London actually did the first sterling transport green bonds. I was quite proud to be associated with that in any small way. So we're seeing innovation around green bonds, and I think that's going to continue to grow. Probably not as fast as we may have thought 2 years ago, but it's strong.
I saw an exciting presentation on those at Renewable Cities. I forget the guy's name, but he was really dynamic speaker from the UK.
Oh, is that Sean Kidney?
Yes. Yeah.
He's actually from Australia, but yes.
Oh, sorry.
Yes. Yeah.
those funny accents.
Incredible sort of clear thinker, dynamic. He's been he's been one of the main reasons why the green bond sector has got where it has. And I think what we need to see though is real mainstreaming. So we need to see mainstream ratings agencies, covering or providing the ratings. We need to see all the information in the Bloomberg terminal and used, and that's coming. That's certainly something that's en route. And you now see, I think Mike Bloomberg is very into this kind of transparency around the green characteristics or the climate characteristics of bonds, not just of equities, but also bonds, which is absolutely critical.
Bloomberg has been great. Love him coming out so strongly about this topic. Well, thank you very much for your time. I want to make sure you get lunch, so let you go now. But thank you very much.
Always a pleasure. You do great work.